We are going to be talking about 3 quantum computing stocks that made headlines this week and what's happening with them, also seeing if they are valid or no, focusing on a few points. Keep in mind, this is not financial advice. So what's happening on the quantum computing space? Well, they are making waves after Google's new chip called Willow is solving problems in minutes that will take even supercomputers millions of years to actually solve. Wall Street is very excited of this, calling it the next AI wave because of the potential to transform industries like cryptography, AI, and optimization is driving massive excitement and stock momentum. The 3 names we're going to be focusing in will be quantum computing, IonQ, and Rigetti Computing. This is the performance over the past months and year. Definitely over the past month, RGTI, Rigetti Computing, has been the leader with almost 600% return, IonQ 53%, and quantum computing QUBT with almost 400% return. But over the past year, definitely quantum computing takes the first place with 1800% return, IonQ 231% return, and Rigetti Computing 818% return. Definitely huge numbers for this, outpacing the broader index and most of the stocks. A quick comparison of these 3 companies, well, they all belong to the same sector, information technology. Quantum computing belongs to the application software industry, has a market cap of almost $2.1 billion, almost the same enterprise value, $2.09 billion. 44 employees, something very interesting, and only 1 Wall Street analyst coverage, which is very low. Keep in mind that below 3, it's considered extremely low for a company, signals that no major Wall Street firm or bank for now is interested on deploying capital resources on covering the stock. Second, IonQ belongs to the tech hardware, storage, and peripherals industry with a 9.6 billion market cap, enterprise value of 9.2 billion. 324 employees and 6 Wall Street analysts covering it. Third, Rigetti Computing belongs to the semiconductor industry, has a market cap of 2.6 billion, enterprise value of 2.5 billion, 134 employees and 6 Wall Street analyst coverage. Also keep in mind that these are very small companies, given the fact of the employees. But starting with quantum computing, we're going to see the overview and the momentum. The performance, it's up 1830% year-to-date growth, with 2 main catalysts, especially this week. It secured a contract with NASA this week, and it's benefiting from the announcement of Google's revolutionary Willow chip. The market sentiment from Wall Street is a strong buy, but keep in mind, it only has 1 Wall Street analyst coverage. The risk and the technicals for QUBT, the risk, well, it has a short interest of 12.4%. Anything above 10% or double digits, it's considered very high. Share short or 14.6 million. With the cover 1. This shows very liquid. If you want to enter short, or if you enter short on this stock, it will be very easy to you to get out. So it's considered very low on the standards. With a 24-month beta of 2.13, high with a high volatility. Technicals, I think this is very interesting to actually watch. Comparing it with its simple moving average, its 10-day simple moving average is at 12.1. So the stock is trading for 45.8% above it from the last closing price. 50-day simple moving average at 4.8. The stock price is trading almost 270% above its 50-day moving average, and that 200-day moving average, which is trading almost 912% above its 200-day moving average, way overextended and maybe overvalued, signaling risks. Its revenue, a very interesting point as well, it's the very low amount of revenue they've made, third quarter report, and over the past 12 months, they've made less than $400,000. Its NASA contract, which made a lot of investors very excited about, it's valued at only $26,163, driving significant stock momentum. So very small contract and very low revenue, keeping in mind that it's almost a 2.1 billion market cap company. Its book value, its tangible book value, 4.8 million, declining rapidly over the recent quarters. If you see here the comparison how it's actually been declining, this means how much is a stock of the company worth based on its assets. But right now they issued some shares to the public, which gave them 90 million in funding and now puts its value at 94.8 million. This still indicates potential overvaluation and market exuberance because they are almost a 2.1 billion market cap company. 5 main takeaways for QUBT. Well, starting with revenue and NASA contract, its last year's revenue it's almost $400,000, with NASA's contract just worth a little bit above $26,000, highlighting overhyped reactions. Valuation, market cap of almost 2.1 billion, implies almost a 2,000 times price to sales and also a 32 times market cap to tangible book value, signaling irrational exuberance. Cash burn. Quarterly free cash flow burn it's at $5.1 million. Recent $90 million funding extends runway, but no clear path for profitability. Its management practices, this is also very interesting, past dividends and buybacks raising concerns about priorities. Very interesting to see a company with a very low revenue doing buybacks and also giving dividends to its current shareholders. Also, its speculative hype. Stock have surged 500% over the past month, but dropped in this week in 2 days 40%, signaling a lot of caution for this stock. Second, IonQ, ticker IonQ. Well, its overview momentum, its performance, well, this year, 258%. Two main catalysts, it's identified as a full stack quantum computing leader by D.A. Davidson, one of the leaders in Wall Street for analyst coverage. It gave them a $50 price target, up from 20, so a lot of increase there. And the market sentiment, it's a buy rating, strong buy. Here from tip ranks, we see that it has 5 Wall Street analysts covering the stock. Its current stock price at $44.4, highest price target of 15, average price target of 40, and the lowest one being $18 per share. The risk and the technicals for IonQ, well, short interest also very high, above 10%, 14%. Share short, 30.2 million. Days to cover, 1, also very low, which is good for the ones who want to short it. And 24-month beta of 4.1. Very high volatility, almost double than quantum computing stock. Its simple moving average technicals, its 10-day SMA is trading at 36.6, and the stock is currently trading 21% above its 10-day simple moving average. Its 50-day simple moving average trading at 25.3. The stock, the last price trading at 75.5% higher than its 50-day moving average. And the stock is trading at a 257% higher than its 200-day moving average, sitting at $12.4. Its book value ratio jumped from 4.3 times in September to 22 times its historical average of 3.8 times, signaling potential overvaluation. This is, I think, one of the most important metrics to see on a stock, which shows way overexamined just recently, you see here in the graph. Another point that I really like to consider is insider sells and buyings. There has been no a single buy from insiders since October, which the stock has jumped 440%. Basically, insiders have been selling the stock at a fast pace since October. As we see here, October and December being really strong months for that. These do not signal a sell signal or a buy signal, but I think it's important to see whether they have a lot of faith right now on the stock or no. 5 main takeaways for IonQ. They also had, similarly as quantum computer, a contract Air Force of 54.5 million, which led to a 6 billion market cap jump, raising some concerns about if it's worthy or not. The valuation, a market cap of above $9 billion, despite minimal revenue of $37 million over the past year. They also have a third one, their cash burn, with $365 million in cash and currently burning at $92.9 million over the past year. IonQ has over 3 years runway. With fourth, dilution. Share count is up 5% in the past year with 98 million in stock-based compensation. And fifth, insider selling, significant insider selling over the past 6 months. Third and last one, Rigetti Computing, RGTI ticker. The overview momentum, its performance, it's up 151% year to date. Two main catalysts, also new coverage from an important Wall Street analyst, Craig Hallum, with a buy rating, a $12 price target, the highest in Wall Street right now. Analysts see scarcity value in quantum computing stocks, advocating portfolio inclusion. The market sentiment from Wall Street is a strong buy from the 6 analyst ratings, currently trading at $9.4 per share, highest price target of 12, average price target of 5.2, and the lowest of $2 per share. The risk and the technicals for RGTI, well, short interest also very high at 12.4%, share short 34.9 million, days to cover also very low at 1, 24-month beta of 2.9, moderately high volatility, and the Altman C-score of -1, showing a little bit of a potential financial distress. Technicals with a simple moving average, it's trading almost 20% above its 10-day moving average at 7.9. It's trading 221% above its 50-day moving average, currently at 2.9 per share, and 500% above its 200-day moving average, currently sitting at $1.6 per share. Its revenue growth, here we see that Rigetti Computing revenue growth rates over the past quarters. Over the next year, it's uncertain, and it's ranging from 10% to 100% compounded annual growth rate with no guidance, definitely uncertain for current investors. Last quarter report, they actually dropped compared to last year's 23% in revenue, which definitely does not show a significant momentum in growth revenue. Also, insider sales, there has been no buys in the past 2 years, but significant selling in the past 3 months, as we see here. Since December 2021, there only being a buy of $225,000 with total sales about $14.5 million, making it a net sales of $13.9 million for Rigetti. If you see here, we've seen a lot of significant sales, especially in December, taking advantage of the very high price stock. And the 5 main takeaways for Rigetti, it's revenue and cash burn. Rigetti generated almost $10 million in revenue over the past 9 months, but burned $52 million in this period, spending almost $5 for every dollar earned. Valuation, the stock trades at 200 times sales, with a capital raise likely needed for the end of next year. Cash position, Rigetti has $80 million in cash, insufficient to sustain its current cash burn rate. Insider activity, no insider buys in the past 2 years that we saw, and a lot of insider selling, especially this December. Investment risk, the stock is highly speculative with future dilution almost certain as funding dries up. This is almost certain for these 3 stocks, dilution for current shareholders. So this is it. I hope you like it. I don't know what you all think for these 3 stocks, buying them or selling them at these levels.